Welcome back to the Brent Bruce Daily, where each day we take a look and see where home loan interest rates really are, what is making the move, and what to expect for the future. Today is March the 29th, 2023. It is now 4:15 p.m. Central Time, which, as you know, means the bond market is closed, the mortgage-backed security market is closed. So we'll be able to take a look at where we're closing for the day. Now, we're going to have a short report here today because we are really waiting and looking forward to the personal consumption expenditures report coming out on Friday that is really has a huge potential to be market moving for home loan interest rates. So let's take a look and see where we are today and where home loan interest rates are at the moment. Moving over to the charts that we look at each day, take a look at the mortgage-backed security is up 13. Good day there. 10-year treasury is up 2. We never want to see it up, but 2 basis points isn't too bad of a move. Now, when we look at our charts here, we talked earlier in the week and even the end of last week that we would be bouncing around here in this range of the 100-day, what is this? The 50-day, the 100-day, and the Fibonacci level here at 100.758. And that's really where we've been. We closed today just over the Fibonacci level, which means at this moment, our next ceiling of resistance is the 200-day moving average. And we all know that that has been our nemesis for many, many months, almost for a couple of years now. So where we're on home loan interest rates at the moment, we're going to go ahead and run our scenario here for our Brent Bruce Daily, which is our very well qualified 30-year fixed conventional home loan, 800 FICO score, 25% down. Taking a look at all of the banks that we work with here right now, we are at 6.625 with no points. $360 in lender credit at the moment with this Bank 11 mortgage. Now let's open this up and see how effective buying the rate down is at this time. So we always like to talk about the 5.999 range. Right now that's costing 1.485 with this bank, which is $5,346 on the scenario that we're looking at. Now, if I go down here, we all know that for the past few weeks, United Wholesale has been more aggressive with their buy downs. So if they're at 6.625 with $115 in lender credit, they're for 5.999, they're only costing 0.878 in points, $3,161. That is a much better deal than paying the 5,000 that we were seeing over at 11 Mortgage, which is again why you need to be working with a mortgage broker that has all of these different banks to take a look at, to drill into all of their pricing to find the best overall program for your client. Let's open this up here and show you the scenario that we're looking at here today. Again, 800 FICO score, 25% down, as always. Now, I did have someone on YouTube reach out and ask me if I could run the same scenario, but with a 720 FICO. Now, I did not get from that person what their appraised value was or anything like that. They did give me a loan amount, but until I have the appraised value or purchase price, I really won't be able to put that together correctly, but I will. Just give me the other information. But right now, let's just do a 720. Now, we were just looking at a 6.625 interest rate with no points or 5.999 with a cost of 0.878 for a 30-year fix. Now, going to a 720 FICO score, what does that do to us? Kicks us up to 7.125% with 11 mortgage. If you want to pay a point, you're getting down to about 6.49. Or let's go ahead and take a look at, for instance, United. Hold on. If we go take a look at, let's look at Flagstar here, 7.125 with a little bit of a credit. If you want to pay a point, you're getting to 6.5. So again, 6.49, about the same. Let's look at United Wholesale, 7.125 with a little bit of a cost actually. And if you want to pay a point, you're getting to 6.5. Okay, so not as aggressive. Basically, someone who has a 720 FICO score with 25% down is going to be right around, 6.99 is only costing $356. So essentially, you're at 6.99, 6.875 in that range with minimal points, or if you want to pay a point, you're at about 6.5%. So you see here again why we always want to take a look at all the banks, all the pricing scenarios in order to find the best deal for the individual customer based on their scenario. Sometimes it's better to go FHA, even if they have a down payment. Sometimes it's better to go USDA. Sometimes it's better to break up two loans and have a first and a second. We structure these transactions. So as you can see, interest rates right now are really holding out and waiting to see what comes out of our personal consumption expenditures report that is coming out on Friday. I will keep you posted. We'll make a game plan tomorrow and we will see how it all looks here on Friday for our big market moving report, the personal consumption expenditures. Make sure that you like, subscribe, and share. Let me know your comments, thoughts, if I'm crazy or if you agree. We'll talk to you again tomorrow.